this video, we're going to look at how to find stocks to trade. Now, I'm going to start this by beginning that how you look for stocks to match is going to have a lot to do with your own trading style or the method that you're going to be using. Now, traders that are going to be looking to trade between support and resistance are going to be looking for an entirely different stock than somebody like, Gil Morales or one of the big hedge fund managers. It really has a lot to do with what you're looking for. Now, on the surface, that seems kind of simple, but in my own experience, I found that from my own particular style of trading, there's four key concepts defining stocks that have big potential, and I define big potential as stocks that have runaway capability. I want to find stocks that are outperforming the rest of their peers on a fundamental level, and then look for compelling technical action or technical criteria to show that they're getting ready to take off. So the four key concepts are really a combination of fundamental and technical criteria. Now, without going into a big definition about what the two of those things mean and some of the other things that we're going to be talking about, I've written a big report that's the same title as this video, How to Find Stocks to Trade. You can find it over at my website at StockOptionSystem.com. There's nothing to opt in. It's a free report. It's used as a guide. It's a monster piece of work of about 5,000 words, give or take, that'll go into more in depth on these topics. But this video is to kind of serve as a brief overview and to kind of give you an actionable plan on what to look for. So, the four key concepts defining the big stocks, the winning stocks with runaway potential, are accelerated earnings, explosive price moves, new price highs, and high relative strength. Now, let me also say that these are to act as a guide. They're not set in stone. I tinker with them a little bit here and there, but I don't really deviate too far away from these four things. These four things are always at the forefront of my mind as I'm looking for stocks. So if you're looking to model stocks and have a lot of, explosive potential, this is a good place to start with these four keys. Now, accelerated earnings. I didn't invent this concept. This was actually, I got a lot of this from William O'Neill and, momentum style investors. And without going through and reading every one of these examples, the stocks that were doing well, that were up and coming, that had some kind of key service or, unique product that was in demand, that solved a big pressing need in the market, inevitably their fundamentals, their sales, their earnings, all of that was starting to improve and kind of reach a critical mass. Now, earnings are everything on Wall Street. Everybody's career, everybody's future lives and dies and prospers based on how well they're able to interpret earnings for a company. Every big institution, every fund manager, every trader from Wall Street to Main Street wants to find the next Apple computer. They want to find the next Microsoft. They want to find the next Google. And the way they do that comes down to one key criteria. If you look at all the stocks from the last 50 to 100 years, the biggest winners had some big explosive move in their earnings, and that touched off everything. It was like lighting a match in a dynamite factory. You can run around in a dynamite factory with a lighted match and nothing may happen, but all it takes is one spark and then boom, everything explodes. That's the way you have to look at it with up and coming companies, is that their earnings will be that match that touches everything off. Now, as I mentioned, this isn't something that's new, that's just happened in the late 20th of the 21st century. If you look at some of these lower examples, like from Studebaker, Cuban American Sugar, DuPont, some of these companies aren't even around anymore. But in their day and age, they were the Google, they were the Apple, and they were the big stock leaders that took the market higher. So keep in mind, you want to look for improved fundamentals and companies that are getting ready to explode and have accelerated earnings. Now, this is an example of a company that I had found just before I was doing this slide presentation. Accelerated earnings are that match. They touch off and they cause explosive price moves. This company right here, DKL, don't know if it's going to go anywhere, but it's got my interest. It's exploded out of a contracted price period and has started to move into expansion. I'm expecting it to pull back, and if the pullback looks attractive, then I'm looking to take a position myself. Now, this is not a trade recommendation, but I'm just giving you an example, a case study, if you will, of a stock that's got my interest, that has that compelling price action, uh, riding on the back of its fundamental criteria. So, companies also are usually trading near or at new price highs. Now, here's why I like new price highs versus companies that have declined and that are coming back. I'm not saying that I don't trade those companies. Priceline was a good example. Priceline was a big company back in the late 1990s during the dot-com era. Got crushed back when everything exploded in the internet age. Fought its way back. Got shellacked again during the housing crisis like the rest of the stock market. Fought its way back again. Good company, strong competitive advantage, just a monster in its marketplace. But it had to come back and go through these highs and lows that were set during its decline. And during these highs and lows, investors that were too scared to lose, that didn't want to take a loss, will wait for years rather than wait for a loss. And when the stock starts to come back, they want to get out. They want to get break even. And so that causes all kind of wild price action, and it can cause you to get stopped out unnecessarily. Stocks that are at their new price high don't have that problem. They have a lack of overhead resistance. And so they have an advantage of momentum that can keep going without having to worry about any kind of chaotic or volatile price action that could shake you out or, cause you to lose sleep at night or make you make a decision to get out early when you normally would sit tight. So you're on the path of least resistance. You're on the side of the trend. You're riding a stock that has accelerated earnings and that it's experiencing an explosive price move, and it's probably in a firm trend, and that's where the bread and butter in the market is made, by trading on the right side of the trend. Now, if you have these combinations, then you have a stock that has high relative strength. And here's just a brief, definition that I borrowed from Investopedia.com regarding relative strength, but let me add to that. Relative strength is probably the best indicator, in my opinion, the best indicator to find winning stocks, because it's ranked between 1 and 99, and a stock that's at 1 is a dog. It's dead. It barely has a heartbeat if it has one at all. A stock that has 80, 90, or higher is a stock that is in a leadership position. And what I mean by that is stock leaders are the stocks that exhibit the most amount of strength during a rally, and they also exhibit the most amount of strength to resist a decline at times during a decline in the market. So, if you stick to stocks that are near their a new high and they're trading with a lot of relative strength, then that means that they're outperforming the rest of the stocks in the market, and that's where the action is. That's where you want to be. Keep this in mind. It is better, again, in my opinion, and there's studies that back this up, it is better to trade strength where the market is the strongest than to buy stocks that are cheap. There's a reason why stocks are cheap, because nobody wants them. Their earnings have fallen off. They don't have a competitive, place in the marketplace anymore. They're on their way out to being obsolete. The companies that are leading the market, that's where the significance is. Those are the ones that are leading the charge in the economy. So I have all of this contained, like I said, in this report. This video is kind of to give you a brief overview and to give you some guidance, tinker with it a little bit. There'll be some other videos that'll come out and that will talk a little bit more about, how I actually start breaking it down and what are some of the tools that you can use that are free to help you kind of uncover some of these gems. And the companion guide to this, like I said, goes into this into a lot more depth. And there's no opt-in. It's free. So if you want, check it out. If not, go back and review these videos and everything over again. And good trading.